The US dollar is lower to kickstart the new trading week in the US session. There is a holiday in most of Europe for Whit Monday, so activity is pretty quiet in trading here today, although that dollar is a little bit lower. We'll talk about that in this video from a technical perspective, so let's get started. Looking at the euro versus US dollar on the hourly chart, you can see in trading on Friday, the market came down to test the 200-hour moving average. It did the same thing on Tuesday. That gave traders the go-ahead to lean against that 200-hour moving average on Friday and bounce off that level. We closed in between the 100 and 200-hour moving average to end the trading week last week. And in trading this week, we started up near the closing levels from Friday, moved up to the 100-hour moving average. That's the blue line in this chart before rotating back to the downside, but then moved back above that level, extending up to above the 100-hour moving average and also above this swing area through here, which had earmarked before going on vacation last week. Well, not quite a vacation, as you've seen, it moved for temporary move out of our house. So it was quite busy, but we did move up to a high of near 114.39, which happened to correspond with the line that I had left in my chart going back to this high right here as a target. We did break above that level in that trade last week, so it had, well, it didn't exactly do its job at that point, but for whatever reason, trading here today, the market did find some resistance sellers against 114.39, rotated back to the downside. We are back within this swing area and also back down testing the 100-hour moving average at 1.14097. Currently, just above that level, 1.1411. If the price is able to stay above this area, then the bias remains more to the upside. If we move back below the 100-hour moving average, we're back in neutral territory between the 100 and 200-hour moving average. Also, the 61.8% retracement of this move to the downside from the April high to the May low. That level comes in at 1.13787, right where the right just below the 200-hour moving average. So this area is going to be key, especially after testing it last week on Tuesday and again on Friday's trade. That's Wednesday and Friday's trade. Let's take a look at the dollar versus yen next. And if we look at this currency pair again from the hourly chart, with all my levels in there from last week, what sticks out to me is the cluster of moving averages here. We have 1, 2, 3, 4 different moving averages, including the 100 and 200-hour moving averages. That's these two lower blue and green lines. And then the higher blue and green lines represent the 100-bar moving average on the 4-hour chart, the 200-bar moving average on the 4-hour chart. So you can see, as in trading here today, the price moved back down toward that cluster of moving averages, finding some support against the one of the middle ones, the 100-bar moving average on the 4-hour chart, bouncing off that level. We're currently back above the 200-bar moving average on the 4-hour chart, also above the 50% retracement of the move up from the April low to the May high. That level comes in at 144.278. So both those these moving averages, along with the 50% retracement, give the bias a little bit more of a bullish tilt, despite the fact that the price is lower on the day. The buyers came in against the level that you'd expect, and they're starting to push the price a little bit more to the upside. If the price could stay above the 200-bar moving average, stay above the 50% retracement level, that would be the most bullish scenario now for the buyers, and give the sellers a little bit cause for pause after falling and failing to get below those moving averages earlier in trading today. So watch this area right here. Between 144, looks like 18, 144.28 for support. As long as the price remains above those levels, I'm going to give the tilt to the bias, to the buyers in the short term. Finally, let's take a look at the sterling versus US dollar. And in trading last week, the price came down on a number of different occasions toward some moving averages, including the 100 and 200-hour moving averages through here. We moved up on Thursday, moving to a new high. That new high took the price to the highest level going back to, well, let's go back to the weekly chart and look back to here. This is in, 2021, but short of this bunch of swing areas going back to that time period. So the price did fall away from that level, but going back to our hourly chart, you can see how the the momentum took the price lower on Friday into those moving averages, and then we closed in between the 100 and 200 hour moving average. And trading here today, the price did try to move a little bit lower early on, but could not get anywhere close to the 200 hour moving average. Rotated back above the 100 hour moving average, and that gave the buyers to go ahead to push to the upside, and they did. We moved up, looks like toward the high price that we saw from, or the high swing area, the swing level that we saw from Wednesday's trade right through here, and found willing sellers against that level. So there is a little sort of kind of like a head and shoulders kind of formatting, with a shoulder here, a head here, and a shoulder potentially here, and neckline coming down through here. But doesn't necessarily mean we're going to go lower. What traders would have to look for is a breakback below the 100 hour moving average of 1.3545 to give the sellers more confidence to push to the downside. Absent that, and the buyers are still a little bit more control, at least in the short term, we're going to need to get above the 135.80 level to increase the bullish bias. If we're able to do that, we'll start to look toward the high prices from a couple weeks ago, and then the high price from last week's trading at 1.3616. So there you have it. A technical look at the three major currency pairs to kickstart your Monday morning in the U.S. session. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.